reasonably, I think, optimistic. We've had kind of a flat pullback quarter where things didn't do a whole lot, but after a 32% rise in 2013, I don't think a flat going sideways quarter is bad at all. We've changed Fed chairmans. We heard the Fed chairman make a very uncharacteristic hawkish remark a couple of weeks ago. We heard more, I think, of the real inner Yellen today in her dovish remarks. And, you know, I think the inner Yellen said, what was it? Extraordinary support will be needed for some time. Stocks like it. I don't think the Fed's going anywhere. I think stocks can do okay. I don't think wildly optimistic, but okay.
Today, listen, the market was up 10 points before she even opened her mouth at 8:30, so you can't necessarily say this whole thing is because Janet Yellen came up with a dovish speech. Certainly, the next 5 or 6 points might be attributed to that, but I think people are reading way too much into that. I do not think she's going to turn around and be weak-spined versus what she said 2 weeks ago.
All right.
I think there's select areas that we would be focused on. Commodities in emerging markets are not them. We think this is just a short-term bounce in those asset classes. More fundamentally, we like Europe. The European story is one of growth accelerating, emerging from recession, a more credible ECB, the Bundesbank coming out and saying the QE is not off the table, so that policy stays there. It's supportive. And I think it's one of the areas where earnings growth can deliver because we're coming off of such a low base. In the U.S., we're 20% above peaks from an EPS perspective. In Europe, you're 40% below still.
What about you?
The investors are getting a little wary here. We are seeing positive numbers. We're hearing talk of interest rate hikes sooner rather than later. And as you said, as you pointed out, you know, Russia has not made further moves into Ukraine. We didn't really see that flight to quality anyway with gold when Russia moved into Crimea. And we're not really seeing it at this point because we're not seeing further advances by Russia. Now, if that picture changes, you could certainly see gold pop significantly. So investors should be careful here. We are really not buyers of gold again until we see the 1250, 1255 level. At these levels, we're not that interested at this point. Well, I was having this conversation with several traders today about copper. You know, at this $3 level, we really are seeing some buying interest begin to creep back in. The concern over the credit default, escalating in China and a lot of those deals being backed by copper is kind of fading a bit. This may be the end of that. And so the idea of copper pouring into the market and prices going much below $3 is not that likely. So people are starting to dip their toes in and look at the base metals, including copper, at these levels and saying this may be a good level to buy for the long term. Yes.